What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw a mixed bag in the stock market before FOMC, and I do believe that FOMC could be a major catalyst for a very large rally in the stock market. I'll let you know exactly what to look for, so first up let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on SPY we were down 0.3%. And we are still seeing SPY closing below that lower Bollinger Band, so we are still extremely oversold on the daily chart. You can also see the 5 EMA is extremely negatively sloping, almost a straight line down, and we do have a lot of space to close that gap. So I do believe that FOMC is going to lead to at least a dead cat bounce. Now there's always the possibility with one of these events that you could see the market moving in both directions. And the reason I believe that we are due for a rally instead of more downside is because I do not believe there are any sellers left in this market, and we need to go higher before we can go any lower. Remember, this is a downtrend until it's not, so by no means am I expecting to break out of this low and go right back into a bull market. And that is why the bear has now moved to lower prices, because we do expect to see lower highs. So the number one thing with tomorrow I do want you to pay attention to is going to be this very critical level down here at SPY 370, which is our extremely critical support trend line now that we are below the other trend line, which was right around 394. So if we see SPY breaking down below 370, it is possible to see full-blown capitulation, and we could go much lower. And if you have never seen capitulation, you are essentially just going to see a straight line down, and there will be many consecutive red candles with no bounce in between. And it is just everybody exiting, everybody disgusted with the stock market, getting margin called, stop lossing out of their positions, and completely giving up on the market for the indefinite future. So if we do get capitulation, that will be the breakdown of SPY below 370. And I think it's very likely that SPY will try to get to 350 in the event we get capitulation. Now that is the capitulation scenario, but that is not the scenario that I think we are heading into, and that is not what I expect to happen with FOMC tomorrow. Just be aware of it, because if you see SPY below 370, you should automatically be expecting SPY to start trending down towards 350. So there is no other way to say that. That's as simple as it gets, that SPY below 370 is extremely risk off for capitulation. Now what I do think could happen is I think SPY could test 370 as support. We could get a lot of clarity in this market from FOMC that could lead to a lot of short covering, a lot of buying, and we could go all the way back up to fill the gap by quarter end, which is all the way up here at SPY 401. So by the end of June, I expect to see SPY closing all of the gaps above, which means SPY will likely go all the way up to 401 and possibly even up to 408 where the bears are waiting. This doesn't mean you're going back into a bull market, and as I always tell you, we are not expecting a bull market until we see some type of higher highs and higher lows that break out of the previous daily highs. Otherwise, we are continuing to expect to see lower highs and lower lows until this bear market is over, and I am not going to bother trying to call the bottom, although I do think this is a tradable bottom in the short term. And a tradable bottom essentially means that if you're a bull, you have a very clear risk level to set your longs at, and if you're wrong, you're wrong. You take the small loss, you lick your wounds, and you move on. Another way to view 370 is if you are a bear and you're currently shorting, you should consider taking profits at this level and then re-shorting if we break down below that level for the next leg lower. Don't get overly greedy. If you have profitable short positions, don't be afraid to lock in profits. And if you're a bull and you're looking for a long entry, this could be the one you've been waiting for. So you know critical support is at 370. So to the upside, you're looking for resistance right around 385. The gap close at 389. The previous trend line right around 395, and then the next gap close at 401, and that is all of the critical resistance to the upside to pay close attention to. Remember, we're in a bear market and a strong downtrend, so the bears are going to be at all of these levels, so it's not going to just be a smooth ride higher. But every time we break above one of these resistance levels, that should lead to some short covering, which could cause another impulsive rally to the upside, and there's no telling how high that short covering rally could go. So tomorrow is going to be full of fireworks, and there's likely a very large move in either direction coming. Even though I do favor the upside move, that does not mean you should throw all caution to the wind and completely forget about what I said, that if we break down below 370, we could see SPY capitulating and going down to 350. So be prepared for either scenario and let the price action guide you on which one is playing out, and always use proper risk management. You should not be blowing up your account on a single trade, so make sure you know these levels and you're scaling in and out of your trades appropriately with the proper risk management strategy. On the NASDAQ 100 triple Qs, we were up 0.18% and we did close just above the previous close yesterday, and intraday we did make a new daily low. So without a doubt, we are extremely close to capitulation, and on the triple Qs, that will be the breakdown below 275, a breakdown below 270, and we'll very likely start seeing the triple Qs heading down to about 260 to 258. That is your capitulation scenario and not necessarily the scenario I prefer. I do think we're getting way too oversold in the short term, and we're due for a bounce to test some of the resistance to the upside. So on a bounce off of 275, you're looking for resistance at 285, the gap close right around 288.5, 293, and our 20 simple moving average and gap close right around 298 to 299. There will be bears at all of those levels, so you need to be prepared to see a lower high and a rejection from any of that resistance, and you're getting a lot more cautious if we start losing support at 275 and then break down below what could be support at 270. Remember, you always need price action to guide you because nobody knows for sure which direction we're going tomorrow, and you need to be prepared for either direction. This is clearly a downtrend, so even on a bounce, you should not be getting bullish. Don't get greedy, and if you're taking long trades, always lock in your profits because you don't want to get caught holding long positions in a bear market. In the Dow Jones, we were down 0.42%, and the Dow Jones did close at a brand new daily low below the lower Bollinger Band, so we're getting extremely oversold, and we're well on our way to that next leg lower at 297. Are we going straight down to 297 without a bounce? Only time will tell, but we are at risk for capitulating down towards that target while we're below 308. The counter view to the bear scenario will be a bounce in breaking back above 308 and back above 310 and closing the gap right around 314. And we will still have resistance at 316 and the next gap close at 323. There will be a lot of bears at 323 and 326, but of course we're in a bear market, so there's going to be bears at all of this resistance above. So the bears still have the advantage of the trend, even though I do think we're due for a bounce in the short term. In the Russell 2000 IWM ETF, we were down 0.48%, closing at a brand new daily low and starting to close some of that gap below, but the gap doesn't fully close until we get to 165.7. If we break down below the gap close, the next support leg lower is all the way down there at 156, so that will be your capitulation lower price target. If we start to bounce off of the gap, you're looking for strong resistance at 175, and above that you're looking for the gap close at 177.5, and above that you're looking for resistance at 181.5 and the gap close just above 183. So as you can tell, there's a lot of gaps to fill to the upside, but IWM may want to fill this gap to the downside, find support before bouncing and filling some of the upside gaps. And do remember, we are in a bear trend, so even if we bounce, you still need to be cautious of more downside. On the ARKK ETF, we were up 1.12%, and ARKK's Bollinger Bands are starting to expand, which is going to allow ARKK to continue to trend lower down towards the price target at 33.7. If we start to bounce with a dead cat bounce, you're looking for the gap fill above just above 39 and strong resistance right around $40. And if we break above 40, you're looking for strong resistance at 42 and the gap close at 43. Don't get bullish on ARKK until we can at least get back above 47 at this point, but I would really like to see this ETF getting consecutive closes above 52. On the VIX, we did see a little bit of VIX crush with the VIX closing down 4%, but overall the VIX is still well above 30, which is a very volatile bear market. It's possible the VIX gets crushed down during the bounce to close the gap right around 29.6. So don't rule out the possibility the VIX needs to go lower before it can go any higher. The full-blown capitulation should have the VIX at least reaching 38 and possibly even into the 40s, and that should mark the bottom of this bear market if we do see capitulation, even though I don't necessarily expect to see capitulation this week. You can never completely rule it out, so still stay cautious while the VIX is above 30 and watch those very critical support levels. On Bitcoin, we're currently down about 2.5%, Bitcoin trading just below 22,000 and very close to our price target at 20,000, which should be a very strong support level. Bitcoin looks extremely oversold and we more than met the double top price target, so it's likely that Bitcoin could be due for a dead cat bounce to retest the breakdown of that support level at 28,000. Remember, that was a strong support level, so it would make sense to bounce up there and test it as resistance. But we could get rejected from that level and still come back down to retest support at 20,000. Below 20,000 will likely start trending down towards 12,000, and on the bullish breakout above 28,000, you're looking for the next bull breakout above 32,000. On NVDA stock, we were up 1.21%, and NVIDIA still holding above this support trend line and getting very close to the price target at 150. It's likely we'll hit the price target at 150 unless we've already seen the bottom below the previous low. So if we do get some type of triple bottom look off of about 155, look for the gap fill above right around 169 and just above 180. If we fill those gaps, we can't get bullish until we break above 200. So anything below this previous high at 195 to 196 is still a lower high, which means we could still be in the bear market and we could still be trending lower. If we break down below 150, the next support level is all the way down there at 125, which is more than likely your capitulation price target. On Tesla stock, we did have a bullish day going up 2.39%, but the price action's still below all the moving averages and we are still in a bear trend, so it's still possible we're coming down to retest support at 620. Below 620, look for the next leg lower at 571, and we're getting a lot more bullish if we can start breaking back above 700 to 710, but we don't have the higher high until we break back above 775. So if you want to be a lot more conservative, wait for the breakout above 775, and if you want to get a lot more aggressive, you can start getting bullish above 700, but if we get rejected from 700, look for that next leg lower at 620 to 571. On Apple stock, we were up 0.67%, and Apple did hold that support zone right around 132.5, but we are getting extremely close to the price target at 130, and we could be there as soon as tomorrow, even if it is an intraday bounce. You're looking for a bounce off any of this support to start closing the gaps above, which are at 137 and 142.5, and we're getting a lot more bullish once we start closing above 150. Anything below 150 is still a lower high in what could be a bear trend that has much lower prices. So look out for full-blown capitulation if Apple starts breaking down below about 130. On the financial sector, we were down 0.86%, and the financial sector continues into the bear market, making a brand new daily low with the very strong bear trend, so it could be trying to go a little bit lower before we bounce and fill the gaps above. The industrial sector was down 0.25%, stabilizing right around this lower Bollinger Band, and we do have two gaps to fill to the upside, but we are still in a very strong bear trend, so be very cautious of more downside. The healthcare sector was down 0.95%, closing way below the lower Bollinger Band, so getting way too oversold, so I do expect to see a bounce in the short term in the healthcare sector. The energy sector was up 0.19%, closing below the 20 simple moving average for the second day in a row and losing the bull trend. So you're looking for the next breakdown in the bull trend on the energy sector on a breakdown below the 50 EMA and our support trend line right around 82 to 83. So jumping back over to the S&P 500, while I do think in the short term we are due for an end of month rally to fill all of the gaps above, you cannot completely rule out capitulation if SPY starts closing below 370. Please always use proper risk management because we are in a bear market, which means we could be going much lower. And even if you're shorting in this bear market, all bear markets have very impulsive counter trend rallies. You cannot throw caution to the wind in a volatile market. You need to always use proper risk management and have a very solid trade plan. Get ready for a huge move with tomorrow's FOMC meeting, and just know the price action and follow the levels and trade in the direction that the price action allows you to. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.